Alright guys, let's get started. You're watching Crypto Corner with myself, OJ, crypto analyst since 2016. I bring you all the latest news, market analysis, tutorials and guides and deep dives into different projects and everything to help you enhance your knowledge and understanding of this crypto space so that you can navigate safely in the cryptoverse. Now today we're gonna do a little bit of technical analysis. We're gonna look at Bitcoin, Ethereum, XRP as well. I mean, the markets are down a little bit, so I'm gonna talk about this and a couple of the big news of the day. So without further ado, let's get started right after the intro. Alright guys, let's get started with a quick market roundup. This week started on a market low. Bitcoin dropped below 30,000 again in the last few days, a move that was actually quite predictable. It had an overbought RSI indicators, both stochastic and simple RSI on the larger time frames like the 3-day and the weekly as well were pointing towards a pullback. If you saw my shorts, I posted 3 of them, Bitcoin, Ethereum and XRP, all showing the same bearish outlook for the short term. So Bitcoin fell below the 28,000 and that was on the 21st of April, and it broke the support of the first Fibonacci level here, falling into the current range where we are most likely finding support right now at the 50th daily moving average. A mix of regulatory crackdowns and fears of rate hike caused this retreat, but I feel it's just a short-term pullback. Many started calling for the winter to be back, but not just yet. Bitcoin was on a steady rally because of a genuine interest in crypto. TradFi lost out after the collapse of SVB and Signature Bank, and Bitcoin became the alternative. So then a few regulatory signals dragged it down again. Well, first we had the regulatory action on a few crypto entities like Coinbase and Binance as well, and threats of crackdown on others. Then the Fed officials indicated that the interest rates hike cycle isn't over. And then we had the SEC's lack of clarity that started to concern many in the crypto space. And on top of that, profit taking has started among Bitcoin holders. That's another reason why the price is dumping. Plus, there is also the fear that the US government may dump its Bitcoin worth $1.1 billion on the market. Whales also had a role to play because they started to sell their Bitcoin 2 weeks ago. Having said that, this could be the end of the sell cycle. If the 50th EMA doesn't hold us here, we could see Bitcoin drop to the lower support of the 0.50 Fibonacci level, which is currently sitting in the mid 25,000 level, but this is not a guaranteed move. We could also just bounce right up from here. As you see, the stochastic RSI is showing oversold on the daily, so this could mean that the sell-off is coming to an end. And it wasn't just Bitcoin that was bearish on sell-offs from whales. All markets were volatile over large exits. Ethereum suffered from a post-upgrade syndrome. That's what I call it. It had the long-awaited Shanghai upgrade. I talked about this, I did another video about this, and with that came a lot of excitement, and it had built a momentum in the run-up to it. But as it always happens, traders used this to buy the news, sell the event type of thing, and this is exactly what happened. The price pumped to the 2000 range, and as it touched this level, profit taking kicked in, and we saw a noticeable drop of 7% in just one day here on the 19th of April, taking the price from 2100 down to 1923. And just in one day, then the days that followed we dropped even further, making the whole drop from the top of over 2100 to the current price of around 1800 right now, to overall 15%. It looks like we are finding support here at the 50th daily moving average, but I don't see any buy volume kicking in. So a further drop to the support of 1763, that's 1763, this support here, this to me is the most likely scenario. XRP is also looking poorly right now, since hitting a high of 58 cents on the 29th of March. The coin erased about 24%, dropping to around 44 cents, and it has recovered a little bit since then. It's now trading at 45.64 cents of a dollar, but another drop to this support here of 44 cents, which is coinciding with the golden Fibonacci pocket of 0.618 Fibonacci level. This is the most likely next move. A bounce from here would create a double bottom formation, which would be a bullish indicator, but that is yet to happen. It's not a definite move. Overall, the XRP blockchain has gotten more active. It has over 4.5 million active accounts, of which a large majority come from Asia. Ripple's presence in the region helped build confidence among users, and of course, XRP has been on a roller coaster ride ever since the Ripple versus SEC case. We know that there is regulatory confusion in the US about crypto, and the SEC and the CFTC are undecided about who regulates crypto tokens. Asia is better alternative because markets such as Dubai, Singapore, Hong Kong offer much more clarity about what's allowed and what isn't. With this, it's not surprising that we see larger volumes on XRP trading coming from Asia right now. And speaking of Asia, China wants to pay its government employees in digital yuan. The country is doing everything that it can to make the CBDC popular, but it hasn't been able to take off. It tried enabling gambling and giving people cash, but nothing has worked. Maybe this will. We'll see. India is also struggling to get their CBDC onto a good ground. I do hope that this struggle of these two countries might act as a turn-off for other CBDC trigger-happy governments around the world, but I might be too naive in thinking this. It could also act as a learning path, a learning curve, but at least it provides somewhat of a delay in the rollout of this much despised by us crypto folks alternative to cash. Anything that delays the rollout of the government-issued digital currencies is a bonus. I really don't know why aren't we more proactive in our fight against government control, and CBDCs surely give unprecedented control and surveillance tool that everyone should be dreading by now. But here we are, 5 years on, I'm still talking about CBDCs and I'm not seeing much resistance against them. And lastly, Yuga Labs, the Bored Apes issuer, won a legal case over copycat NFTs issued by RR, a company that claims to be doing a parody, but it is in fact issued just complete copies of the famous BAYC collection. This case began last year when this guy called Ryder Rips and friend Jeremy Cahen teamed up to create identical copies of the BAYC profile pictures, supposedly as a satire. They've claimed that the Bored Apes artwork is racist. Yuga Labs denied it and sued for trademark infringement, false advertising, and unfair competition. On Friday, the court ruled in favor of Yuga Labs. This could have a longer-term impact on Web3 and even the art community. The judge agreed to Yuga's claims of trademark infringement and cyber-squatting, which is good for any creator and IP owner. I still think that the Bored Apes are unjustified in their hype and the popularity that was built on the back of lucrative celebrity deals that for the most part were undisclosed, so there was some shady marketing going on. Celebrities were gifted some of these NFTs only to boast about them on their social media and pretend that they actually spent millions of dollars and help create the enormous hype and subsequent FOMO that resulted from this. Is it a fair play? I don't think so. Nobody knew that Justin Bieber's ape was sent to him from his manager. Everyone thinks that these celebrities actually bought their apes out of their own interest and added collectible value. It's a rogue marketing in the very least, and I'm still not willing to invest in this, even though there is a potential of a more ape FOMO during the next bull run. And with the movie being in the works, surely we will see more big headlines surrounding the Bored Apes. This ship has not been wrecked yet, not completely at least. Keep your crypto safe with the best cold storage on the market, Keystone Wallet, air-gapped device with top-tier security. Alright guys, so this wraps up today's episode of Crypto Corner. As you see, I'm actually back to my usual studio. I've returned from my travels in Asia. It was a long 5.5 months, almost 6 months trip in Asia. I went to Thailand, I went to Vietnam, I went to Philippines and Singapore and then Bali, and I finished in Paris. So I did have a couple of nice days in Paris, but I was mostly doing touristic stuff. This is why I didn't actually record a video from Paris. Anyways, I'm back now and I will be reporting to you from my usual studio for the next month or maybe month and a half or something like that until I hit the road again. So enjoy this content. If you like it, show your support by by leaving a like and a comment below, and make sure you're subscribed. Don't miss an episode, because now that I'm back, I will be doing more regular episodes and I will be bringing you even more market analysis and reviews and tutorials and everything that you are expecting from me. So yes, I'm back and Crypto Corner is becoming more regular yet again. Thanks for watching until the end. Again, leave a comment below if you have any questions or if you have any suggestions for content that you want me to cover, and I'm gonna see you in the next episode.